There are 4 trends most experts predict will happen in 2025 when it comes to housing, and there's also 2 wild cards that could throw everything off balance. I'll explain all of them next. If you like what you hear, you get some value out of this, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team to talk about how you can manage these wild cards or understand these housing trends better, you can do that with the link in the comments. What we have seen is that most experts, Zillow, the Mortgage Bankers Association, Realtor.com, the National Association of Realtors, Fannie Mae, the list goes on. There is a common theme in 2025 housing predictions. The first is that we're going to see modest normal growth in home prices. The second is that we will see sales increase, and the ranges on each of these prices are between 2 and 4%. I would imagine we're going to see something a little more aggressive than that in the greater Philadelphia area because of our inventory levels. Sales increases, people are talking about between 5 and 10% more homes that sell in 2025. We're going to see more inventory to come on the market. That's the wide prediction number 3. And lastly, mortgage rates. We might be in for a little bit of a bumpy ride. No one really knows where that's going to happen, and those predictions are all over the place between 5.8 and 6.8% for next year. It's been very consistent across the board with these entities and experts that are making these predictions. Nobody's talking about the wild cards that could affect what happens with housing in 2025. The first is mortgage rate surprises. So a lot of forecasts suggest mortgage rates are going to be around 6%, maybe 6.5%. There's unexpected factors that could lead to some volatility in the mortgage market. Economic growth, inflation pressures. We also have the jobs reports, right? They often send mortgage rates into a little bit of a tizzy, and they jump up or down based on how favorable or unfavorable the jobs report is that comes out every month. The Federal Reserve policy on decisions that they're making about rate cuts, right? What are they going to do in December? What are they going to do in January and February? These are all things that are going to impact mortgage rates. And with the new administration coming into office and that administration's fiscal policies, the Trump administration's fiscal policies, they include deficit-funded tax cuts and increased spending. Well, that could cause inflation to move a little higher. It could keep mortgage rates elevated. We really don't know. And successful efforts to curb inflation might stabilize rates or lead to a decline. So there's some factors here we're just not sure about. So what that means for people that want to buy and sell is that buyers need to get their ducks in a row. They need to be prepared. They need to understand what's on their credit report, how their debt to income looks. They got to get their tax returns filed for 2025. We're almost at the end of the year, and be ready to lock in their rate when you see the dips in mortgage rates. And there's a lot of banks out there that offer the ability to lock a rate in advance of buying a home, or some banks offer it once you have an agreement of sale executed. That's usually the norm. So you want to understand how you can lock rates if you're a buyer and be prepared to do it if you see a dip in the market. On the seller side, rates rising hasn't affected the greater Philadelphia area too much. Sure, it's pricing people out, but hasn't affected prices. Prices are up just over 8% on the median in 2024 compared to 2023 year to date. So we haven't seen that slow things down. But if buyer budgets shrink and rates go up, a seller may need to be open-minded to adjusting their price. They may want to price right at the market, knowing that the average list to sales price ratio is right around 100%. It's 100.3 to 100.7% in the suburbs, just under 97% in the city of Philadelphia. So we see that sellers are getting very close to their asking prices, if not just a little above in the suburban markets. And if your home's not moving, that may be the time to have a price adjustment conversation with your agent and understand you may need to look at that. So that's trend number 1. That's wild card number 1 that could throw off all of these predictions here. The other wild card are federal housing policies. So we've seen that with the election results that came in, we've got the House, the Senate, and the office of the president all went one way. And new policies could either bolster the housing market or add to its challenges. We don't know how it's going to play out. And there have been proposed initiatives by President-elect Trump to decrease building costs. Sounds great. And to increase supply also sounds great. I think it's easier said than done, personally. There's a lot of things that come into play here. And opening up federal land is one of them for home builders, and reducing regulatory costs. If they're talking about reducing regulatory laws in local townships and municipalities, that could take years. So federal lands and home building costs and regulatory costs, that all sounds great and bringing them down. However, there's other policies around increased tariffs or immigration that could raise construction costs and slow the progress of new home development. And in the greater Philadelphia area, we're not going to see a big pop in new housing development. Most of the new construction is out further west, or it's in the city itself with new homes being built, home properties being knocked down. That's what we're seeing in terms of new construction. So I don't see this impacting our market as much as the national market. And what this means is that if supply does increase, buyers may see more affordable options. Again, we're not going to see that same bounce here. So while this may impact nationally, I'm not clear it's going to happen locally. And higher construction costs could offset some of the benefits of increased supply and cause prices to go up. So the whole point here is there's these two things we don't know about: what's going to happen with mortgages and what's going to happen with federal housing policies, which is all the more reason as a home buyer and as a home seller, you want to be prepared in advance, have strategy meetings, plan things out, have a game plan, because these things are going to happen. And when they do, are you going to be in a spot to make a decision that's going to be right for your household or your family? And the more information you get up front and the more prepared you are, the better off you'll be if and when these wild cards come into play for the housing market.